When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon and welcome to GrainTV. It's July 5th, 2013. I'm Logan Burgess. To my right here is Cody Bills. Cody, let's jump into fire tips, see how the grains traded here on a Friday. As you can see, a lot of red on the board. Old crop corn down 6.5 cents. New crop corn down 11.5. Old crop beans 21.25 lower. New crop losing 22.5 cents. Chicago wheat was off 5 cents. Kansas City wheat off 8.75. You know, Cody, with the July 4th holiday yesterday, a lot of traders were still on vacation today. We were expecting kind of a quieter trade and really a trade that lacked firm direction. This kind of, I would say, didn't fit the bill there. Certainly saw a directional move lower today. What was kind of your take on it here?
Yeah, I think the big thing here is that you had great growing conditions, and that's going to put pressure on the market. You know, for the most part, we're not seeing any severe heat for the next 10 days, and about 80 to 85% of the Midwest is going to receive some rain. So that's very positive when you're looking at the growing conditions. That's going to put pressure on corn, soybeans, and wheat on the whole. But if you look at export sales, you know, we did get some numbers out there this morning, but nothing really to move the market one way or the other. Wheat came in right around 593,000 metric tons. We saw corn come in at 233,000 metric tons, and that was up 31% from the previous week. The big surprise, I think, came from soybeans. It booked about 120,000 into the old crop, and expectations were between 0 sales and 100,000 metric tons. So we were on the high side there. It was good to see some exported beans.
Yeah, you know, one thing that did seem to kind of weigh on the grain market in general today was some macro forces. If you look there at Fire Tip, we had the dollar index quite a bit higher, up about 1.25%. That's a relatively big move there. Take a look at this daily chart here of that September dollar index, and as you can see here, today's action, quite a big move there, and that's really been on the heels of a pretty strong move in the dollar index. Certainly this has all been driven by the Federal Reserve and expectations for their policy changes coming down the road. We did get an unemployment report out today. Unemployment remained unchanged at 7.6%, but I think the one thing that people were looking at was the non-farm payrolls report there. That came out better than expected. So bottom line, I guess, when people see positive economic reports come out like this, it opens the door to the Fed limiting their bond buying program here in shorter time, and that's going to support the dollar index here moving forward. As a result, when we see the dollar move higher, typically we see the grain market move lower, and I think that certainly didn't help out anything here today.
Yeah, just the magnitude of that dollar move. What it means is really the importing nations, their cash doesn't go nearly as far when it comes to purchasing U.S. Grains. And I think, you know, when you look at that combined with the fact that we have the possibility of an enormous crop coming out of the fields, great growing conditions, I think it just kind of primes it for some selling on this Friday. We'll have to see if we get any kind of a rebound or if we get follow-through selling as soon as we get a little bit more volume in here next Monday.
Absolutely. We'll keep you posted on all expectations for next Thursday's USDA WASDE report coming down the pipe next week. But in general, that's what we saw here for a Friday on the grain market. Thanks a lot for joining us. Have a great weekend. We'll see you on Monday.